What is up, everybody? Today is Thursday, August 15th. We actually took two trades today, giving us both very nice risk to rewards. One of them was a 1 to 2.38. The other one was a 1 to 2, basically. But overall, look at this price action. It was just a straight shot up. So how would we have known that we were going to play longs all day? Well, let's take a look at the higher time frame. Let's take a look at the daily. We notice here that price had originally swept this here before this move on up, so that gives us some kind of confluence, like, okay, if this is going to truly be a liquidity sweep, we want to see bearish fair value gaps here on the daily chart hold us down. That's why I had marked this out here. If we look, there is a fair value gap right here. If we get a daily close above that, it will equal bullishness. We got that daily close above it on Tuesday. So now let's dip on down to the 4-hour time frame. If in the morning you were looking to see some kind of move back down, it's also a good idea to wait for the 10 a.m. candle to start, because that candle will tell us a lot about what price wants to do. So we had news in pre-market, we had CPI that shot us up, and we got a close right above here. Here's a 10 a.m. candle close. Now, when that happens, sometimes I like to wait until 10 o'clock. Sometimes I like to take it after 9:45. It all depends on the day. If we haven't gotten an entry from 9:30 to 10, then I wait for the 10 a.m. candle to see where are we closing. What is that 10 a.m. candle that gets printed respecting? We have an inversion fair value gap here on the 4-hour time frame that got invalidated. If it got invalidated, then that would mean that we are bullish, looking to target the draw on liquidity here. And also filling in this inversion fair value gap as well, because we are already moving on up. Look at this 4-hour candle has already printed through this 4-hour fair value gap. Massive. We have two inversions that are a lot smaller, so a lot more precise, but regardless, all three of these that are meant to hold us down got invalidated. So we are very bullish. We are very bullish up until this level right here at 716. So like I said, 10 a.m. comes around, we notice, okay, we have that move on up. What could we get after 10 o'clock? We could maybe get a retracement back into a PD array, a 15-minute or a 5-minute fair value gap that'll then launch us back up. On the 15-minute time frame, I noticed a couple of PD arrays that were created way down here. You notice these two are the only ones that I had marked, because this was the 10 a.m. candle for the 15-minute chart. So this had not been created yet. I wanted to see if price would retrace back down into either one of these, which of course it did not. So I dropped down to the 5-minute. On the 5-minute time frame, I noticed that we had a 5-minute fair value gap right here. I was looking to see what was price going to do. Will it inverse this? And if it inverses it, should I take it short down into equilibrium, or should I just wait and see if it comes down into equilibrium to then take it back up? I don't want to fight the higher time frame trend. I don't want to fight the higher time frame bias. And our bias was long. So if we inverse this and it started to come back down, I was going to wait patiently until we hit a high probability area to take it long once again. So when I noticed that this 5-minute fair value gap was holding us, I dropped down to the 1-minute time frame. Look at the price action in here. We see that we have the 90-minute cycle from 9 to 10:30. We had accumulation and manipulation on up. But we also had distribution on up. And then it didn't make sense, right? Sometimes the quarterly cycles do not align to how it's supposed to work. It can happen if there is a higher time frame objective that is needed to be met. And so in this instance, I did not take into account what these quarters would do based off of the previous action, but rather I was looking at them as pockets of time where I would have a high probability setup. So in this instance, right, Q3 was distribution up. We retraced down into this 5-minute fair value gap. I noticed that we were being held very nicely. I saw this 1-minute fair value gap and 1-minute fair value gap that should technically hold us down if we want to keep going down. But if we end up getting a close above it, that becomes an inverse, and it's a very good chance that we're going to continue on higher. When I saw this big expansion candle up here, and then I saw that these candles were holding, and it created this 1-minute bullish fair value gap, I actually entered in long pretty early, just because I had high conviction on the fact that this was going to continue moving on up. When I saw that we were respecting this really well, I was very confident in the trade. I just let it run, do what it had to do. And so I decided to take some profits in the next quarter because there was a high chance that we would then reverse. So I took it pretty close to high of day, shortly after high of day. And then I took it pretty much into the touch of the inversion fair value gap that we have here. And then when it got really close to the 50% mark of that inversion fair value gap, I took the rest of my profit off the table just because I wanted to secure it for the day. I was well above my target on what I wanted to make that day. So then we were expecting a retracement for the PM session, right? But obviously we didn't get that. And it's the same kind of logic as before. I waited for a quarter, and this was on a different account. It wasn't on this Apex account. It wasn't on my funded futures account that I did this. I noticed that we came up, dropped down, took out liquidity, and started to consolidate in this area. This purple box right here is a 5-minute fair value gap that, again, price is being held up by. Where was there one fair value gap that would technically need to hold us down to continue further? This one right here on the 1 minute time frame. I saw price was consolidating in this area. We entered into Q4, a very good chance to move on up. When we got this candle close above, I market ordered in right here. When it retraced a little bit, I was in a little bit of drawdown, kept my stop loss right there. That was okay. I knew the plan, and my target was the fill of the 4-hour inversion fair value gap. Now, why is that the case? Price moved up so aggressively over the 50% mark, and we didn't get any kind of rejection. We're already at midday. Typically, there is some kind of reversal if there is going to be one at like in the afternoon, and we weren't getting any kind of action, but rather the lower time frame continued to show bullish action. So then that's when I decided to take it long once again, target the fill of the 4-hour inversion, and then lo and behold, we did not move anywhere after that. So now my thinking is that this afternoon, or actually tonight for London and Asia session, we're probably going to retrace down into equilibrium off of this leg and then move back on up, targeting this draw on liquidity. So very simple price action. Do not fight the higher time frame trend. If it looks like it wants to go aggressively higher, ask yourself why. Is there any context behind suggesting that we should continue moving higher? Where is that draw on liquidity? Where is the price trying to get to so fast? Asking yourself those questions is going to save you a lot of pain. I know a lot of people tried going short. There was no reason today to go short whatsoever. It was a buy day. So like I said, hopefully you guys ended green today. Very simple, very straightforward. Doesn't have to be complicated. And yeah, I will catch you guys tomorrow. Peace.